everybody, Buffy the Rate Slayer here, and we are back with the final episode of February 2023 Weekly Market Insight Series, which is coming directly from the Capital Markets Trading Desk at SunWest Mortgage Company on this beautiful rainy day in California. So let's get into it. The holiday shortened week kicked off with persistent concerns about the Fed keeping interest rates elevated, as well as a deepening geopolitical tensions and earnings shocks. An equity sell-off snowballed amid growing signs that the world's central banks are far from ending their fight against inflation. U.S. stocks ended this week mostly in the red following the release of minutes from this month's Federal Reserve meeting, which came without any new information. The recent shift in expectations for the rate outlook seems to have taken shape, with investors ramping up their bets on higher rates for longer. So, let's see what else is under the surface. All right, so oil futures slid as investors weighed the possibility of further monetary tightening against signs of improving demand from China. West Texas Intermediate crude traded slightly more than $74 a barrel. Furthermore, U.S. claims for unemployment benefits unexpectedly fell to the lowest in 3 weeks, signaling continuous tightness in the labor market. Initial unemployment claims decreased by 3,000 to 192,000 in the week ending February 18th. Continuing claims decreased by 37,000, the biggest drop since December, to 1.6 million in the week ending February 11th. The labor market is tight due to robust job creation, low unemployment, and a number of open positions that's keeping the inflation elevated and amplifying the concern for the Fed. Another report showed that in the fourth quarter, the U.S. economic expansion was weaker than previously estimated, reflecting a downward revision to consumer spending as the Federal Reserve's preferred inflation figures were revised higher. Inflation-adjusted gross domestic product increased at a 2.7 annualized rate during that period, compared to 2.9% previously reported. Household expenditures increased an annualized 1.4% in the final 3 months of last year. According to the Philadelphia Fed report, the general regional business activity was reported at negative 6.5 in the prior month. General activity at firms rose to 15.8 versus 12. New orders fell to 6.2 versus 10.8, whereas sales fell to 14.5 versus 20.3. Wondering how the housing market is doing? Well, I'll just have to tell you. The sales of previously owned U.S. homes unexpectedly declined for a 12th straight month in January. Contract closings slipped 0.7% at the start of the year to an annualized pace of 4 million instead of the projected 4.1 million. Though the decline in sales has been an ongoing trend over the last year, it highlights the extent to which elevated rates continue to higher activity in the housing market. A gauge of U.S. home purchase applications fell last week to the lowest level since 1995 due to the highest mortgage rates in 3 months. The purchase index of mortgage applications slumped 18.1%. The MBA's index of refinancing applications fell 2.2 last week to a 3-week low. The gauge of overall mortgage applications dropped 13.3, the biggest slide since the last week of September. Let's wrap it up. All right, so the latest Fed minutes showed almost all officials agreed it was appropriate to raise interest rates by 25 basis points at the meeting, while a few favored or could have supported a bigger 50 basis point hike. However, in recent weeks, the release of stronger than expected data has led to a ramped up expectations that the Fed will hike by another 50 basis points in the next meeting. Fed Presidents James Bullard and Loretta Mester have recently advocated the same. So what do you think would be the increase of the next rate hike? Share your thoughts with me in the comments below and stay tuned. Well, that's it for this month, guys. Hey, and do me a huge favor. If you like this video, please hit that like button below. Yeah, you see it right there. And to be notified every time we upload a new video, please click subscribe. Your support to our channel is greatly appreciated. As always, stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Have an awesome Friday, everyone, and an even better weekend. Buffy, out.